This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. Today we lead with news the gloomsters are going to have to wait even longer for a US slowdown and recession. Markets are reducing the chance of a Fed rate cut in mid-September. First up in the US, initial jobless claims came in less than last week, a surprise because an increase was expected. But to be fair, the actual shift wasn't large. But markets took more notice of the surprisingly strong 1% rise in retail sales in July, far more than expected. Americans are still spending big on cars, appliances and furniture in a surprise burst of activity that's propelling their economy and helping shake off fears of an impending downturn. This was the largest jump in more than 2 years. Car sales were particularly strong, but there were gains across the board at restaurants and bars as well as groceries, electronics, furniture and health goods. Year on year, American retail sales were up 4%, delivering real inflation-adjusted gains. Helping was that business inventory growth was minimal, so their inventory to sales ratio stayed quite healthy. But spoiling the party somewhat was a small drop in industrial production in July, and one that was more than expected from June, but only easing 0.2% from a year ago. However, the New York State Factory Survey improved more than expected, although the Philly Fed's similar survey turned lower. Both are positive about the future, however. In Canada, despite central bank rate cuts there, home sales fell in July. The looming rail strike there may not help future sales either. In Japan, they released their second quarter 2024 GDP result late yesterday, and it expanded a very strong 3.1%, way more than the 2.1% expected, and far better than the 2.3% fall in the first quarter. In India, their July passenger vehicle sales fell almost 2% in July from the same month a year ago. This was not expected, but to be fair, these are setting in to a higher level than has been seen over the past 24 years, not just as high as you might expect given their booming economy. But two-wheeler growth was very strong, up 12.5%. In China, the data out yesterday reinforced their tough economic conditions that are extending there. Retail sales were up just 2.7% from a year ago. Industrial production rose less than expected at 5.1%, but electricity production, a better metric, rose only 2.5%, and prices for new houses dropped 4.9%, and the most since 2015. Second-hand houses dropped as well, but who knows? No cities reported year-on-year gains, the first time that has ever happened. In Australia, the July labour force rose to be now 14.5 million people, up 58,000. Their participation rate rose again to 67.1%, and their jobless rate ticked up to 4.2% by 23,900 to 637,000 people unemployed. Full-time adult average weekly total earnings were up 4.6% to $1,994 a week. And staying in Australia, consumer inflation expectations are high and not easing. They rose to 4.5% in August from 4.3% in July, the highest level since April, and similar to what they were in April 2023. The RBA will be unhappy about the stickiness. And we should probably note that UBS said it'll sell off the $2 billion real estate fund it acquired when it bought Credit Suisse. It joins many other professional investors selling out of troubled commercial property markets, especially office buildings. And global container freight rates eased ever so slightly again last week, but they're still 280% higher than year-ago levels. The core pressures are unchanged. Bulk cargo rates are little changed this week, but are still more than 50% higher than year-ago levels. And we should probably note that iron ore prices have slipped below $100 a tonne in a move down that started at the end of 2023, now back to levels first seen a decade ago. The 2021 peaks are long gone, and the general trend will stay negative until China recovers. Even India can't arrest this slip. The US Treasury 10-year yield is now just on 3.93% and up 10 basis points in a reaction to the strong US retail sales data. And the price of gold will start today up $13 at $2,454 an ounce. Oil prices are 50 US cents firmer at just under $77.50 a barrel in the US, while the international Brent price is up $1 at $80.50 a barrel. And the Kiwi dollar starts today, little change from this time yesterday, still at 60 US cents. A week ago, that's pre the OCR cut, it was exactly the same level. Against the Aussie, we're down 30 basis points at 90.6 Australian cents. Against the euro, up 10 basis points at 54.6 euro cents. That all means our trade-weighted index starts today at 68.5 and unchanged. And the Bitcoin price starts today at $59,326 and up a mere 0.3% from yesterday. Volatility of the past 24 hours has been modest at just on plus or minus 1.8%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.